All right, folks, it's July 12th, 2023. Can we get a quick mic check? How are we coming in live for the night? About 7 o'clock here on the West Coast. We're going to get this session fired up, and we're going to be talking about the central bank's rug pulling real estate. So we're going to pick on the Canadians first, then the Californians, then we'll cover the rest of the United States. We're going to talk about investors. We're going to talk about the mindset of a first-time homebuyer like myself, and how I am planning on investing and moving in the real estate asset class. Now, while you guys are waiting, if you guys haven't already, please subscribe, hit that notification bell, tell your friends and family that we got a party going tonight, and we are talking about the greatest transfer of wealth in world history over here on this channel. I appreciate all of you guys' support, and you can find everything you need over at my website, zachrector.com. Now, I just sent out for the Twitter folks that we are live for the night, and we're going to retweet that one out. We'll share it, and we'll get the folks on in and get this party started, okay? So we got a lot to talk about. I think it's incredibly important to talk about this asset class. I know everybody wants to talk about crypto. When's XRP going to go to the moon? Our whole platform was really built off of XRP, absolutely. But during this bear market, we've had a little bit of time to talk about these other asset classes, precious metals, prepping, talking about our businesses within our business development program. And we're just trying to bring as much value as we can to the people because, it doesn't take away from any of the conviction that we have in our digital assets. It's just we understand that we're in the middle of a transition and you're going to see disruption, chaos in every single business sector, in every single asset class. For the person who's tapped in and awake to this situation and ready to take action, there's going to be incredible opportunities for us, and so I'm really excited to bring this session here tonight, guys. I've been meaning to do a real estate update for a minute. I got a lot to cover in tonight's episode, so I'm going to try to get it started, get it going, and then at the end, I am going to take some Q&A, and I appreciate everyone for joining me tonight. With that being said, guys, without further ado, let's get it rocking and rolling. So crypto prices before we get started, not sorry, but 30,345 for your Bitcoin, 1871 for Ethereum, and XRP's at 47 cents. And so like I said, crypto not moving right now, kind of chopping sideways. Personally, I think we're in the middle of a bull trap rally. Stay prepared, but we cover that in every single episode, every other day. So I'm just going to leave the crypto conversation for now. Let's talk about the real estate asset class, and let me know in the comments down below. Are you guys looking to invest in real estate this year? Are you holding out for now? What are you doing in the real estate asset class? Let's talk. Let's network. Let's build those relationships. There's a lot to be done here. There's going to be incredible opportunities coming from here on out. So starting off, folks, we got to talk about the inflation and the data that we're looking at right now. Kobesi letter summarizes, we now have CPI inflation at its lowest point since April 2021. First core CPI inflation dropped below 5% since December 2021. Fed paused interest rate hikes at the last meeting, and I think that the Fed faked us out with that one. First jobs report miss in 15 months, yet more rate hikes are expected and bond markets are at their lows. Something doesn't add up here. Well, we know what doesn't add up, and it's that markets are irrational. Peter Schiff summarizes, stock market investors continue looking in the rearview mirror on inflation by focusing on declining CPI numbers, while ignoring that those declines are causing oil and other commodity prices to rise and the US dollar to fall, which points to a much higher future CPI prints. Now, let me explain the situation in simple terms so that everyone can understand. Let's not dance around the numbers. Let's not fudge the statistics like our Federal Reserve loves to do. And let's talk about how we got here. So this all started with peak inflation up at 9%, right? 9.1 inflation. So that is when the Fed, started to raise interest rates, and they tried to cool this thing off. Inflation was about to run rampant, so they had to cool this thing off. So this is the rug pull that I'm talking about. And before I get into it too, folks, remember, they didn't just rug pull real estate, they rug pulled everything. And that's why I've been saying that we're in a recession, crypto's in a bear market, real estate just getting started, and a lagging asset class. But I titled this one the real estate rug pull because I want to talk about the real estate asset class tonight in particular. But remember, this was an everything bubble. We've popped it. Everything goes on sale. We talked about it in this morning's update about how used car sales are going down to levels that we haven't seen since 2008 as well. So what happened, folks? Inflation's at all-time high, 9.1%, or the high in most recent years, right? In 40-something years, basically, since the 70s. And so what did they do? They raised interest rates. They popped the bubble. What that did is that brought on a strong dollar, and that's why we saw the DXY, the dollar index, started to climb and go up to its recent highs. What this did was bring down the price of commodities, brought down the price of oil and energy. That gets reflected in the CPI, which is why we've now brought that CPI inflation from 9% down to 3%, because we've effectively put our economy into recession, and we've rug pulled real estate and every other asset class that depends on debt. So the markets are now trying to sense the Fed pivot. They're trying to front run it. But what this is going to do with the DXY dropping off, it's down at, I think, about 100, could be on its way down to 90 here shortly, potentially from Peter Schiff is what he predicted. But even if we don't go that far, we've already dropped down from those recent lows. And this gives the Fed ammunition to continue with 2 more interest rate hikes. And we have to remember that they're sharing headline CPI at 3.1%. Core CPI, which excludes housing and housing and energy, I should say, excludes housing and energy, core CPI only down to 4.8%. That's the inflation number that they're trying to get to 2%. So everybody talks about the Fed 2% inflation rate target, right? That's on the core CPI, which excludes housing and energy. That's why they love that data point so much. They've been, excluded over half of somebody's bills on the month, not included in our inflation tracker, right? Makes sense. So now we see the DXY going down, which is going to cause the trade deficits to go up because we're going to be paying more for these goods, for this energy. And it just so happened to coincide with the OPEC price cuts when crude oil got down to about $67, $70, where we're trying to fill up our strategic petroleum reserve that Biden just dumped for political plays, right? He just dumped our strategic petroleum reserve. Now he's trying to load back up at that, sub $70 price. Right as we get there, we see Russia and OPEC cut. And they continue to do this every time we reach that price point. That's shooting things back up. You tie in this dynamics of the DXY dollar going down. We're paying more for our commodities. We're paying more for our energy. And so this is why Peter Schiff is saying that this is going to come back and revert into new highs for the CPI coming in. But that might not be for a while too, because we got 2 more interest rate hikes coming. Okay, so I think that the Fed still has room to go here. They have ammunition now for their 2 more interest rate hikes. Now we get into how this is going to impact real estate. So that's the breakdown. I tried to summarize how that we went from inflation to the levers that the Fed pulls, why we are where we're at, which is at 4.8% core CPI. They're trying to get it down to 2. The dollar's dropping off. We got to strengthen the dollar, raise interest rates so those bonds start to go back up again. I hope I made that simple enough. Now, how does it impact real estate? Let's get right on into it, guys. Thank you for joining me tonight, by the way. We're going to run up a massive session here. Let's get it rolling. So today, we get the news from the Bank of Canada that they raised another 25 basis points. So we're going to start, like I said, picking on the Canadians, my good friends to the north. I don't know what reality you guys are experiencing up there, but it is absolutely insane with your real estate prices. I visit Canada very often these days, and it blows me away every single time when I go up into BC and I see what's taking place up there. It is insane. Absolutely insane. But let's pick on Canada first. Here we go. They raised by 25 basis points today. And Ron Butler put this tweet out yesterday. And so now we look back, and yes, they did raise 25 basis points. And what is this going to do? There already was an 80% chance rate that they go up. Well, it means that for several thousand people in Canada, it will be the last straw. They will sell their properties. Likely 65% of the sales will be rentals because it's hopeless. In 2020 and 2021, many property investors chose variable rate mortgages, while most took mortgages from banks that don't raise payments when the rates change. Some use lenders whose payments have gone up alarmingly. So we covered this, folks. Remember, this is how we've now had folks that are going to pay 60, 70, and I wish this was a joke, 90-year mortgages because they have mortgages where the payments stay the same. The interest goes up on the adjustable rate mortgage with a fixed payment. It's a fixed payment adjustable rate mortgage. And so their payment stays at, $2-3 grand, whatever it is per month, while that interest goes up, and it's just tacking on more and more interest to this bill that's going to take them 40, 50, and in some instances, literally 90 years, folks, Talk about enslavement, right? 90 years to pay off your mortgage. This is how this is happening. And we covered just a couple weeks ago how there's about $300 billion worth of mortgages and loans on real estate set to renew by 2025 up in Canada. So you have nearly over $300 billion in loans that are coming due within the next year and a half. This situation's a little bit spicy up in Canada, to say the least. While most took mortgages from banks that don't raise payments when the rate change, some use lenders whose payments have gone up alarmingly. Starting at 1.45% 15 months ago, add 25 basis points tomorrow, we're now at 6.2%. Massive payment change, nearly double, and it's becoming very clear that the Bank of Canada rates won't come down till next year, maybe middle of next year. Basically, same situation in the United States as well. No matter how much rents have increased, although some are rent controlled, they can't cover this increase. So those investors will sell. Will this push prices down? Not immediately. It's not a huge number, but it's a part of a picture that may grow steadily. Please know that many variable rate borrowers did switch to fixed rates the last 15 months, but many didn't, and this increase could be the break point. So pressure builds slowly, steadily, but it builds. We will see more investors selling properties, and for some products like high-rise condos, prices may edge downward, and that's without any increase in unemployment. We shall see. And remember, all markets are not created equal. Similar situation up there in Canada, where Vancouver, BC, and you also have Toronto on, over there controlling, and most of the market, when people think of it, they're looking at Vancouver, they're looking at Toronto, the high-flying speculative markets that are going to see the biggest correction, right? Alberta, not so much. It's kind of like the Midwest of the United States. It's kind of just moving up in a more linear fashion. It's not the high-flying speculative, very, very cyclical markets like Vancouver, Toronto, not like New York, LA, Seattle, San Francisco. Right? Same thing basically taking place up here in Canada. Now we continue on here, folks, and you can see Bank of Canada says huge population growth is creating imbalances in the housing market. Fiscal policy is counteracting monetary policy. So we've been covering this. In 2022, Canada had a record year for immigration. I forget the final number, but it was over 1 million people that immigrated to Canada in 2022. And then we also covered how in the first quarter of 2023, they have set a new record there as well. So they're on pace to break the immigration record once again. Now, funny enough, I actually watched the Vancouver news because it's kind of local news for me. I get the local weather and I get to kind of get a feel. I like to get the gauge of what's taking place on my neighbors to the north. I've already spoke on, without giving up my location, I'm pretty dang close up here in the Pacific Northwest, and Canadians love to buy real estate in my market. And so I actually service in my landscape property service business many Canadians each year. And they bring a lot of cash down. It's there's some pros and cons to it, right? For my business, it's great. For me, trying to buy my first time home, they've jacked this thing up because I got the Canadians competing with the Californians, competing with the folks from Seattle that are all fleeing, and then they come up here to the peaceful area. Now, so that's why I'm watching the local news up there. And last night, I see a segment on Hong Kong immigration rising, particularly in Vancouver and in Ottawa. They just passed a bill here where you now don't need to basically, you don't need to graduate from college or a secondary school, whatever they call it up there, to get your full-time, legal status. You don't need to graduate college. Now you just need a job for a year. So if you hold a job for a year, you will be granted full citizenship. And they interviewed a gentleman from Hong Kong. He kind of looked like my age, maybe a little bit older, but he was talking about, assimilating to Canada and how great it was and this and that. But I'm just thinking, so they're having one of the worst housing markets and housing shortages in the world is taking place in Canada, in particular Vancouver, Toronto, but yet they're easing up and they continue to allow more immigration to come in, and they're actually easing up the standards. And so, something's got to give there, right? I'm not saying whether that's good or bad, right? They have a lot of money coming into their country, but I talk to locals who grew up in, Surrey, White Rock, right across the border here, and they come from relatively small town, and they talk about the transition that's taken place in that region over the last, 10, 20 years makes it almost unrecognizable. The neighbor's house next door that's a teardown is now selling for $1 million or $2 million just north of me, right, in lower BC. So it's crazy, but it's not going to get any better for the foreseeable future. They're having to raise interest rates because their inflation problem's even bigger up there, right? So they're continuing to raise their interest rates, but real estate was one of the biggest assets, one of the biggest markets up there in Canada itself. So they're experiencing a little bit more pain. Like I said, we're starting off the night by picking on our Canadians, which, remember, folks, when we're covering this, we're talking about, the good and the bad. The bad can be flipped into good. There's the other side of the coin, which is our opportunity to invest in this situation right now. So we look at this, folks. This is the job situation up there. Let me play this clip. Actually, sorry, we're going to play this clip from the Bank of Canada talking about this population growth and the problem that it's creating. Let me play this real quick for you guys.
They're going to continue to rise. And secondly, how much do increased house prices weigh in your decision making on increasing rates or potentially keeping them at a higher level for longer?
The short answer to why house prices keep going up is supply. We've said that for a long time. There's lots of things that go into house prices. Certainly, housing is very sensitive to interest rates. So when interest rates move, it affects house prices. But one of the fundamental things that's holding up house pricing in Canada is there's just more demand than there is supply. One of the things that's contributing to the demand for housing now is an increase in population. We've seen a return to immigration levels that we had pre-pandemic, and quite a high surge in immigration more recently. So those things are contributing to keep housing prices high. Housing is a component of overall inflation, but we target inflation. We don't target house prices, and we don't target any one sector or one item within the CPI basket.
Reminds me of that soft talk that you get from Janet No-Tellin Yellen, Jerome Powell, all the Fed officials down here, right? Where they do this little soft dance. Oh, we're not trying to impact housing prices, right? This thing's so jacked up, and they're trying to rein it back in, but that inflation's just been terrible up there in Canada. Plus, if they continue with the immigration, they actually make it easier, right? And, you got folks coming from Hong Kong and China with boatloads of cash. This market just continues to go up, right? Now, you want investors coming to your country. You want money coming to your country, right? But the locals are getting priced out. And that's the reality that I'm seeing and that I'm hearing from Canadians that I know, that I talk to, and that I work for, right? And I always hear them complaining about their dollar. Oh, the currency, the exchange rate's not doing too good this year. They always trying to cut a deal. But it's been interesting to watch that dynamic, right? Because not too long ago, they were actually trading closer to par. I think now we're down to about 75% compared to the dollar. But we look at the Canadian employment, and you see something similar that we talked about here in the United States, where most of the jobs are coming from the government. This is the problem. They're in a recession up there as well. Canadian employment, public sector versus self-employment. Now that top bluish purple line is going to be your public sector employment. And then when you look at the self-employment, that is dropping off actually. So we see a similar situation up there in Canada that we're seeing down here. Nearly a third of the jobs that we posted last week actually came from government jobs. So similar situation. But now let's move on over here to the United States. I like to beat up on our country too, absolutely. And we are going to start with the Californians as well. But we look and we see the whole West Coast is the ones that are really experiencing the pain over here, with some other markets on the East Coast as well. But really, this has been a West Coast crash so far. And Joey Politano shares this. He says, it isn't so much that U.S. home prices are falling as West Coast home prices are falling. And this is what I talk about, where not all markets are created equal. In my perspective, up in the Pacific Northwest, where we're seeing price declines of 5, 10, 20% plus in Seattle getting slaughtered, along with San Francisco and California as well, right? This is a different perspective from the Midwest, where you guys are just chilling. A lot of this data, a lot of these situations might not apply so much to you if you're out there in if you're in God's country, the flyover states of the heartland here. You might not be impacted, but in California, the median house payment is now 61% of the median income. This number has nearly doubled since 2020 and is now back to 2006 levels. On average, Californians now keep just about 39% of their pre-tax income after making their house payments. This is unsustainable. And so we see something here. The affordability is going out the door. And it's going out the door in the form of 61% of the median income having to go towards that house payment, not looking good for the Californians. Now, the U.S. 30-year mortgage rate has spiked to a new high of 7.38%. This is the highest level in more than 22 years. It does not require rocket science to figure out that the spike will have a massive impact on the disposable income of people buying a new house or getting a mortgage for the first time. For comparison, barely 18 months ago, the 30-year mortgage rate was just 3%. But there's more. Historically, there has been a strong relationship between changes in mortgage rates, housing market activity, and house prices. This will be a significant test to see if the scarcity factor in real estate becomes a more dominant driver of house prices. Supply and demand dynamics are changing due to a lack of supply in many places, my home country being one of them. In the Netherlands, house prices already rose again in the second quarter despite a stellar increase in mortgage rates. Real estate may be migrating from a real asset to a scarce asset. And that's something similar that we see in the United States. Prices have actually remained strong, relatively speaking, across the board, even though we've raised rates at the fastest pace in history so far, because there is such a lack of supply down here in the United States as well. So what I'm seeing still in my market is FOMO. I am still seeing families FOMO into properties. The last 3 open houses that I went to were on the market within 1 or 2 days after the open house. One of them sold for $10,000 or $15,000 over asking price. So, houses that I'm interested in for my family, good neighborhoods, good price point, folks are still FOMOing into. And they are going off the market in 1 or 2 days. And these are deals that I'm looking at. We're walking and we're like, okay, yeah, not ideal. We can sacrifice a little here, a little bit there. We can make this work. But golly, it still needs, a lot of money for renovations, right? Upstairs is done, but the basement isn't. There's something going on here. These are not properties that are just turnkey brand new. Turnkey brand new in my areas, for 1,500 square feet is $550,000, upwards of $600,000. And if you're talking for, 2,500, 3,000 square foot, larger size home, you'd be at 700, 750, 800,000 in my neighborhood. And so this is why price points from basically 600 to 700 in a good neighborhood are still flying off the shelf. Folks are still FOMOing into this deal because of the supply shortage, particularly in my area. So that's something that we're watching right now closely as we look to buy our first home with me and my family. Now, it looks like the U.S. mortgage financing system is largely nationalized, and this is why we have to understand why another factor that leads to real estate still being propped up and how it got this far. 87.5% of mortgages are purchased by government entities that resell them as mortgage-backed securities, and the Fed has bought about 1/3 of all the mortgage-backed securities they've created. So the mortgage-backed securities, and I know many people would say, and I would say as well, that the mortgage industry has cleaned up some of their act, and they have gotten more strict, and obviously now affordability's gone out the roof, and so that's going to tighten up. The number of people actually seeking out mortgages has fallen off a cliff. But we see, similar to the great financial crisis, all of these mortgages are getting packaged up and then they're thrown into a mortgage-backed security that's bought off by an institution, or in this case, or as of recently, current tally is about 1/3 of all the mortgage-backed securities have now been bought back by the Fed. So when we were talking about the Fed taking their balance sheet from about $4 trillion all the way up to, 8-9 trillion, right? Approaching 10 trillion for that Fed balance sheet. These mortgage-backed securities are part of that, keeping everything propped up, along with everything that all the pandemic games that we saw as well, right? I don't need to go there. We all understand that. So over the last 2.5 years since the events of 2020, the simulations of 2020 and Pandora's box got opened up, and nobody's been paying their student loan debt. Nobody was really having to pay. Now people are finally starting to having to pay, right? And now you're starting to see these mortgages in the form of mortgage-backed securities have been bought back by the Fed to keep this thing propped up as well. And that's part of taking the Fed balance sheet from 4 trillion upwards of 8-9 trillion, and then they printed trillions upon that. So not only have they backstopped the real estate market, they backstopped the banks in March with the banking collapse, and then they now have also printed about a third of all of the US dollars in circulation has been printed within the last 2.5 years. So this is all still playing out, and we got a lot of moving pieces here, and this is why real estate's lagging. It's still propped up, and you have lagging data. Now, this is what's about to give, as Digital Asset Investor said here tonight. He says there's no way on earth this market doesn't correct. Be careful out there. Well, Andrew Logathan shares this example, the real estate market in 2023. The $500,000 house in 2021 at a 3% interest rate is going to cost you $2,100 per month. 2 years later, that same $500,000 house at a 7% interest rate is now costing you $3,300. So it's pretty incredible. We're assuming a 20% down payment, and you have, almost $1,200 per month more in a mortgage payment monthly. But we're not done. Because when you look at this example here, folks, with the increase in mortgage rates from 3% to over 7%, a $400,000 house will now cost you over $1 million. So by the end of that 30 years, you are going to have turned over 1,000 fiat funny money dollars. Now, here's what's good about good debt, right? With inflation, you are getting your debt wiped out in nominal terms. So essentially, you are paying back your debt. You are paying back that $1 million with cheaper dollars because the value of the dollar is getting destroyed. Okay? But this is what I've been looking at here recently as I'm looking at these houses. $500,000-$600,000 over the life of that 30 years, you're paying $1 million, $1.1, $1.2 million. Now, even though inflation is wiping out some of that debt in nominal terms, I'm not trying to sign on to a little cookie cutter box that I'm going to end up paying $1 million cash. Now, I got 30 years to do so, but now this year I'm going to have to pay $3,300 per month instead of $2,100. This is so jacked up, something's going to give, right? And especially as we now start to enter the recession and you're seeing those job numbers being impacted, folks are going to be forced to sell. Now, we don't have as much of the variable rate mortgages going on down here. That's why our markets are a little bit more sound in that way. Because as long as folks can make that payment, right, they're going to hold on to their property, right? They don't have an adjustable rate in 5 years and 10 years. They got that sweet 30-year deal, which is rare for the rest of the world. The rest of the world doesn't get to take advantage of 30-year fixed debt all the way down to 3% just 2 years ago, right? And now all of the dynamics that I started out talking about with tonight's show, with the different Fed levers that they're pulling, combined with the inflation data and how that got us here, right? We're just now starting to see the impact of that massive money printing. We're going to see the impact of the Fed taking their balance sheet from, basically doubling their balance sheet, including mortgage-backed securities, having to provide full backstops for all banks now, or at least the banks that they deem are worthy or too big to fail. And then you're starting to see the rest of the world move away from the dollar, drop our treasuries, drop our bonds. So we're going to have to be buying back more of those as well. Another couple more interest rates coming to try to, continue to finish off the fight against inflation and to strengthen back up the dollar. But I really think that this is the last go at it for the dollar is going to be the 2 more interest rate hikes towards the end of this year. But then everyone is going to be expecting that Fed pivot, and it's just a matter of when. Right. I think we have a consensus here that eventually the Fed is going to have to pivot because everything is going to go bust. Things are already starting to break. The whole dang system started to break in March, and it continues, right? We saw it early in the crypto space. We're going to recover faster in crypto as well. Real estate, not so much. I got some more data points on the length of these housing downturns to show you here in a couple clips. But, folks, today's dollar is just not going as far as it used to, and this interest rate hike is making it so expensive. We're seeing situations like this where mortgage payments now 58% more expensive than rent payments. Guess what happens next? This thing breaks. This thing has to adjust. And that's where I'm at in my market, right? Should I, continue renting for $2,000, $2,500 a month, or should I go buy that same property, that same house, and pay $4,000 per month? What's a good financial decision? And then sign on the dotted line for paying off a loan that ends up being $1.1 or $1.2 million for that $600,000 house. That's the choice that I get to make right now, and every other first-time home buyer as well. It's a joy. It's a pleasure. And we're going to get into the opportunities that I'm looking at the end of this session. And speaking of millennials, it's interesting to watch. 60% of millennials and Gen Z said they would prefer to spend money on life experiences now than save for retirement, per Bloomberg. And we really saw this peak out with the work from home phase. Nobody has to pay their student loan debt. And I personally know many people my age, 28 years of age, they've started, they've racked up their student loan debt, but they haven't been, paying. They work some BS job, remote from home. I'm not here to judge whether or not they add, how much value they add to society, but they're making good money, right? And they're getting ready to travel and go do all this and that. They're putting off home ownership. They're putting off starting a family to go travel and live that, fun life. Show your friends on Instagram that you're traveling around. But are you building wealth? Are you building anything that's sustainable? Are you going to keep your job? And now you have to go back to the office, and now your student loan payments are due, potentially, right? Maybe Biden will forgive it. Get that millennial vote, and he's going to forgive our student loan debt. But we now see, and I covered it here recently, $4 trillion problem, a debt crisis that totals $4 trillion just for millennials, right? So it's interesting to watch, how many folks my age and younger are going to walk in to what I think is the agenda of 15-minute cities. You don't own property. You don't own a business. You go work for the big corporation, or just collect your UBI check and stay tapped into the system, right? And be a good little guy, be a good little girl, or whatever you want to call yourself. As long as you don't have too much of a CO2 imprint and you're a good little citizen, you're going to get your UBI check. And you're going to be good. We're going to build your coffin apartment for you. Talking about opportunities down the road, one of them is commercial conversion, which the way I'm looking at it is, if Amazon's going to go build coffin apartments in Seattle for their workforce, if every other big institution and all these hedge funds are going to be converting all of this office space into something, why not us take advantage of that as well? Let's figure out our opportunity for that as well. I'm not going to be building coffin apartments, but they already are. And so you guys are seeing it. In my area, God forbid you try to put up a single family home on your 5 acres out in the county, you're going to have to pay $50,000 in wetland mitigation and all sorts of other permits just to even start, building. But if you're going to build a new little smart city condominium or a little ground floor commercial with the coffin apartments above it, I forget what the name of those are, but you're seeing them go up in every city. Commercial on the bottom, housing above, right? Go ahead. No permits needed. Just start building it, right? And I'm being dramatic, but that is the situation that you're seeing across America. And you're seeing the millennials, you're seeing my younger generation walk right into it. Now, you're also seeing folks that, like me, that are, financially savvy, make good money, could afford to make a payment. But I'm thinking, why? Why sign on to this? Yeah, am I throwing my money away by paying my rent? Yeah, but I also have options. If I need to pick up and go move to a market where I can go get a mini McMansion for $600,000 or $700,000, then I can do that. Why should I sign on to a deal if I'm not even sure that I want to live in this sanctuary state that's being ran into the ground? And I'm talking about Washington State, of course. Right? And I'm already looking at investing in other states, other cities, and other markets. We're not landlord friendly. We don't have good cap rates. We're not a cash flow state, right? There is some money to be made, but we're already looking at other markets, right? But let's continue on here, folks. Thank you for joining me tonight. If you guys haven't already, please make sure you've smashed that thumbs up for us. And that's what I'm talking about, folks. We are in the first innings of this cycle, right? The average housing downturn is roughly 33 to 70 months. We're in month 6. So we're just getting started. We have another 20, we have another 2 years to go at least, right? We have another 2 years to go. And as we've been saying, if you didn't get your house sold by now during the peak selling season, every single year for the last 20 years, going back to 2000, you can go look on the chart. This is a seasonal market. You sell in the spring into summer, that's your peak, and then you cool off for the rest of the year. Now you're going to cool off for the rest of the year, and maybe you're going to get a little blip. You're going to get a little recovery next year, right? The mortgage companies will start to price in the Fed pivot. Maybe they'll drop the mortgage rates back down, and folks will hop back in. Whatever the story's going to be, whatever the narrative's going to be, or we just continue sliding down, right? I think it depends kind of on what markets you're talking about. Some markets might just continue sliding down, but you have a 2-year window of opportunity here to swoop up deals. That's what's so exciting about this chaos. I'm not trying to present real estate as doom and gloom and as if I'm spiteful because I'm a millennial that doesn't own a home. I really don't care to call myself a homeowner. I care about investing in real estate and building up a generational wealth portfolio within the real estate asset class. And then being able to have a nice place for my family to live. Whether I have to rent or buy, I don't really think that renting is the end of the thing. Now, I'm comparing myself to my millennial friends. They want to go out and travel and just take cute traveling vlogs for the gram. That's not what I'm into, right? But God bless them. Hopefully it works out for them. But for me, we're about building wealth. But I look at this deal. $4,000 a month for the next 30 years, and I'm going to pay 1.2 million on this house that needs another 50 grand in work to fix it up and renovate it. To finish off the basement, I'm going to have to throw another 30, 40 grand at it. Right? This is the deals that I'm looking at. And like I said, I'm not trying to be spiteful. I laugh about that. I laugh. I mean, we're not going to be homeless, right? But it does suck. I already think I'm paying too much in rent. But the opportunities coming for us to make some serious moves in the real estate asset class is what gets me so excited about this conversation. So I just want to clarify that so that folks don't think that I'm, just some spiteful millennial that's butthurt and that, I think that all real estate's bad. Absolutely not the case, folks. I am so excited for us, and we're building out the relationships and the infrastructure and the partnerships to really move on real estate in a serious way, just a massive way, right? I mean, we couldn't be more excited for this opportunity. Okay. And I'm just taking what the market gives me. It's not that I want housing prices to correct. I think that they're going to correct based off of the data, based off of what the Fed is doing, and based off of our economy actually being in a recession. That's what's going to make the markets correct. It's not the fact that I want a cheaper house. It's this. I'm going to take what the market gives me. It's just like with XRP. I can't wish or hope XRP to $10,000. No matter how many clickbait videos I make on XRP going to 10K, that's not going to move the needle. Same thing here. I'm just taking what the market's going to give me. Okay? What the market's going to give us with XRP is going to be pretty damn massive as well. But you guys already know that deal. Now, let's continue here. Let's talk about the investment side of this, and cheers everyone. Thank you. I do have a little something to sip on tonight, just to have a little fun. We're talking business, real estate, making some serious investments over here. We're gonna have some fun while we do it. Run up a massive session here with you guys. Thank you so much. I will be taking some Q&A too. Let's talk about the investment side of this though. So we see here, Airbnb co-founder Joe Gebbia has sold off $893 million of his company's stock during the first half of this year. So you guys can see here, I actually just saw that the biggest executive to dump shares this year was actually been the Walmart, the CEO of Walmart, I believe. But the Airbnb co-founder selling off nearly $1 billion of his own company's stock during the first half of this year. So that gives you a little glimpse, a little idea of what's taking place here in Airbnb. Now, and We've been sharing some stuff here from Nick Gurley from Reventure Consulting. I think he has a great, fantastic YouTube channel, and his website and app, Reventure Consulting app, has a lot of good data to dissect this situation. But I'm going to play this clip here where he's talking about the decline in Airbnb revenues being upwards of nearly 50% in some markets. So they're making about half as much money as they were last year on their Airbnb investments. Let's break down this situation here, folks.
A viral tweet has captured the attention of housing watchers and raised the prospect of lower home prices. The tweet, which was posted on Tuesday, claims that revenues per listing for Airbnb have dropped by nearly 50% in cities like Phoenix and Austin, Texas over the past year. Now, CNBC was not able to verify independently that data, but the analyst named Nick Gurley suggests this could trigger a wave of forced selling from Airbnb owners later this year in the areas hit hardest by this revenue collapse. His tweet has been viewed more than 33 million times and liked and retweeted tens of thousands of times. In response to the tweet, Airbnb says, quote, "The data is not consistent with our own data. As we said during our Q1 earnings, more guests are traveling on Airbnb than ever before, with nights and experiences booked growing 19% in Q1 compared to a year ago." Airbnb also directed us to another tweet from AirDNA chief economist Jamie Lane. He says, quote, "Let me get some facts straight. There is not a collapse in revenue per available listing happening. Is it down in 23? Yes. Is it down 40%? No. I've pulled the numbers from AirDNA's data set mirroring the analysis done by Nick Gurley. What do we find? The average market listed is seeing RevPAR decreases of about 3.6, not 40.3. Given the high interest in that post, we thought we'd have Gurley on and get to the bottom of it all. Gurley is the founder and CEO of Reventure Consulting, a real estate research firm. Nick, it's great to have you on Last Call. 33 million views. I just wonder if you are surprised by the virality of your tweets.
You know what, Carl? First of all, it's great to be with you. But secondly, I am not surprised because I think a lot of people know that the Airbnb market has boomed over the last couple of years during the pandemic. Lots of people bought Airbnbs, deprived the housing market of listings, and now that bubble is collapsing. So I'm actually not surprised that there was a lot of interest in it, especially given the cities that were involved, like Phoenix and Austin.
Big fan of Nick, big fan. And, you know, it's funny to me how they try to cover this up, and this is not consistent with our data. Well, is it consistent with the CEO of your company dumping nearly $1 billion of stock? Is it consistent with that? How does that relate, you know? And so I think it's hilarious. There's many people that are basically, it's like, there's many people that are incentivized or they work in the industry and they are not willing to accept this narrative, right? They are willing to accept now that it's cooling off. It's not how it used to be, but they don't want to talk about prices going down. That's the you know, and then the volume going down. They don't want to talk about the prices and the volume going down. They admit that it's starting to cool off somewhat, but you can see that the industry is really, and this is so important too for the politics in the economy of basically folks can see when the real estate market's crashing and with the cost of goods. That's an inflation, right? So this has been a balancing act that the Fed is trying to play here where they're trying to kill inflation, but in doing so, they have killed off the real estate market. Now, the folks who are just affording their house payment, paying it monthly, they're good to go, right? That's fine. But these investors, particularly in high-flying markets or boom segments of the real estate asset class like short-term rentals, right? That was a boom. Now it's correcting. And so it's not going to be what it used to be, but that doesn't mean there's not still opportunity. That doesn't mean that your property's still not going to cash flow, right? Or cash flow better than it would on an annual basis, right? But it's not going to be what it used to be. So you have to adjust your portfolio accordingly. You're going to have to adjust your strategies accordingly. And so for me, I'm watching this very closely. We just did our Dallas Discord meetup just a few weeks ago, and I got a chance to go drive around Dallas, Fort Worth, McKinney, all the cities in the surrounding Dallas-Fort Worth area, and actually drive some of these developments, get a taste of that market. And funny enough, they actually just banned Airbnbs and short-term rentals in single-family neighborhoods. The Dallas City Council just did. So you're literally could potentially be seeing thousands of investment properties that were Airbnbs either being now switched to long-term rentals or sold off. I would expect many to be sold off because a lot of these properties don't cash flow when you go from an Airbnb model to a month-to-month or a 12-year lease model. They don't cash flow the same. The cap rate's not the same. And so I think you're going to see a lot of properties on the market. Now, what excuse me, what I am interested to see is that ban of short-term rentals by the Dallas City Council. I'm interested to see that get litigated. I have a feeling that somebody's going to be suing the Dallas City Council, and they're going to try to stop that. I'm interested to see how that works. It's a touchy subject for me because I respect both sides, your property rights, being able to do what you want with your property, but zoning laws and people getting told what to do with their property is something that has been standing for a long time. Now, in many places, it's bad. Like I said, in my area, the wetlands, the permits, the nonsense that you have to go through to put up a little house is unbelievable. In other areas, they encourage you to build, right? They work with you. And so in that regards, the zoning is proper, right? You got your commercial areas, your downtown district, and then you got your single family neighborhoods away from the high density, right? And so that model seems to work pretty good in our society. And I do understand how a party Airbnb house next door might not be what you want, right? But once again, if you're not in an HOA, that's your neighbor's property to do what they want with it. So I see both sides of it, but regardless, it's going to come down to the local market, right? Not all markets are created equal. Same thing applies to the landlord laws. And as you're seeing right here with Airbnb getting thrown out basically in Dallas, you could potentially see thousands of properties coming on the market. So I'm already positioning myself to look heavily at the Dallas market in particular. Excuse me. There's many parts of the Dallas market that are attractive, but then with this as well, this is just another incentive here to bring on more supply and to drive these prices down. So it's been very interesting to watch that. And you're seeing it across the board with all investment properties. Housing Bubble 2.0 update from Gordon Johnson. So today we learned that real estate investors purchased 48.6% fewer homes in Q1 of 2023 versus Q1 of 2022, or the largest annual drop on ever, i.e. the smart money is seeing a record collapse in demand. Oh, and the number of units purchased also collapsed from 80,000.128 homes in Q1 2022 to 41,000 homes in Q1 of 2023. In fact, the decline seen in Q1 23 of 49% was bigger than that seen in 2005, right ahead of the last crash. Don't kill the messenger. So where are investors pulling out? Well, the markets that saw the biggest declines were Atlanta at about 66% year over year, Charlotte at 66% year over year, Phoenix at 64% year over year, Nashville 60%, Las Vegas 60%, Jacksonville 56%, and Tampa 54%. Stated differently, the COVID boom cities are the ones seeing the most weakness. Furthermore, with mortgage rates 7% now comfortably above cap rates 5%, suggesting investors are virtually guaranteed to lose money on any rental after paying interest on debt, investor demand, i.e. 17.6% of homes purchased is likely set to continue waning. Conclusion, this is yet another cog in the thesis for those fearful of a housing collapse. Stated differently, the numbers don't lie. Great thread there by Gordon Johnson, and I'm in the same camp here. Don't shoot the messenger, just get ready for the opportunity. That's exactly where I'm at as well. Now, I lost my notepad here because I have a couple notes here on the markets and the opportunities that I'm looking at when it comes to the real estate asset class, folks. I'm about to get to your questions so you guys can start to drop your questions down below. I want to summarize and bring this thing back home for us. I know you guys have been listening to me rant here for 48 minutes and you're like, okay, Zach, thanks for telling me that the housing crash is happening. Now what? Well, here's what we do about this. And I'm not here to give you financial advice, but this is what I'm doing. This is how I'm looking at it. So in regards to segments of real estate, right? Short-term rentals, not something I'm really looking at right now. I am looking at affordable utility housing, right? Some might consider like mobile home parks. Some might consider tiny home villages, stuff like that. Like I said, I'm not here to build coffin apartments, but there's an opportunity to transform some of these mobile home parks, clean them up, make them places where people are actually proud to live, right? And that's affordable utility housing. I think that there's still opportunity to be made if you can build in markets where migration is continuing to go up. And that's what we look for in our markets. I said commercial conversion earlier in this episode, and it's what we're looking at, and their agenda has been here, is to gut out the inner cities of America. That's already underway. This commercial property already declining. I'm seeing the same thing in my area. It's not as dramatic as Seattle, as San Francisco, as office space, right? But across the board, you're going to see incredible opportunity for commercial conversion. So, like I said, I'm not going to be building coffin apartments, but can I build utility housing? Can we build apartments that people are proud of, right? And we got to give the people what they want and what they need, right? That's affordable utility housing. There is still a lack of supply in some markets. The other market too that I'm looking at, and it's more of a hands-on business. It's not just real estate. It's definitely not passive. You're either going to have to put in some really good management or, partner up with someone who's ready to operate these businesses. But the other segment of real estate that I think is going to remain particularly strong and can potentially to continue growing is senior and assisted living. The baby boomer generation, obviously, right, in that prime phase where they're moving out, they're selling out their house, they're handing it off to their kids, right, and they're moving to a home. And so that's not going to go away. And so senior and assisted living is another segment that I have not forgotten about. I am still considering. That's a whole other business though. Okay. So you got to understand that when it comes to this real estate game, it's hands-on or you're paying somebody to get their hands dirty. And that's in regards to management, construction, maintenance, the whole 9 yards. The Joe Blow that you're going to do a mow and blow on the yard. Right. And, even the dang landscapers are raising up the prices on you these days now. And I can tell you that firsthand myself, and we deal with a lot of these property managers. We deal with a lot of these folks. So I've been able to establish a lot of relationships in my area, which is helping me move into potentially buy my first property here. Now in my area, I continue to have strong migration, and Washington State, the migration's actually cooled off. It's actually gone down slightly, but in my area, in particular, my county, the migration continues to go up, and we continue to see Canadians investing in my area as well. But that's the first thing when we're looking at markets, right? So I listed off the segments that I'm looking at first, which is affordable utility housing. Okay. The next one is commercial conversion. That's what I'm coining this term, is commercial conversion. And then senior and assisted living. I think that's only going to grow in demand with the baby boomer generation transitioning from their little nest egg home into the nursing home. Right. And we got to take care. And guys, there's so much dang money in that business, especially on the higher end, the luxury end. The margins are fantastic. When we talk about investing in businesses and real estate, this is what I'm looking at heavily. And, I'll just add this piece too. As someone who lived through seeing someone go through a situation where they needed help, they weren't ready to go off to a home, but they needed in-home care, right? You have home health is another segment of, assisted living. Right? You actually go out and you service the person, or you take care of the person at their home, right? As someone who witnessed that, right? My dad had a stroke. He has since passed, but I got to see that firsthand, and the type of care that you want for your loved one, you're willing to shell out some damn good money for that, right? You're willing to pay for that. And so on the higher end of that business, the margins are fantastic. And that's a business that I believe in, right? That's not being a slumlord. That's taking care of people. And that's how I'm moving into the real estate investment asset class as a whole, right? My thesis, my motive is from that place of how do we provide housing that people are proud of, right? Now, when it comes to markets, like I said, strong migration, and I want pro-business states that are landlord-friendly. It's really that simple, right? I want strong migration. I want continued folks coming in, pro-business state, because we want more jobs getting created, and we want people to be able to keep their jobs. And then we want to make sure that we have strong landlord-friendly laws that protect us as investors, right? And so that's what I'm looking at in my market. So Texas continues to see a bunch of migration, very business friendly, and there's an incredible amount of new construction taking place. So it's a matter of being patient, but understanding that the forces are taking this down lower. So we come in from a position of we're going to help these folks understand the new reality with our lowball offer, right? When we move in to buy our first property, we're going to move in and we're going to be part of adjusting this market and bringing folks back down to reality. And the opportunities are endless, right? There's so many different segments of real estate that you can make work, but it's just like with anything, crypto, precious metals, starting up your side hustle or your business, it's going to be about your education, your commitment to your education, and or partnering up with somebody who's going to handle your investment. Whether that be management, whether that be you're just going to be the hard money lender. I think there's an incredible opportunity to for creative financing going forward because the debt market's been jacked up. So you're coming in from a position where you can negotiate, get more people to take owner financing, seller financing if they can afford to do so, and you allow them to get closer to the price that they want, but on your terms. Interest only for a set amount of time and or at a lower interest rate. We're going to do this loan at 5%, 6%. If you want to get this deal sold, here's a contract right now, right? You're going to carry a good portion of this and our deal on our terms at your price. Here you go. And this is where we get to play, but we allow our folks and our specialists and our experts to handle that for us. So right now, every single day, I'm assembling legal, assembling brokers, accountants. We're getting together with property managers, contractors, and we're establishing relationships. We're showing them that we mean business. We're getting our funds ready, our dry powder ready to go. And we're about to move in a massive way. Massive way. When it comes to being a first-time home buyer, I already kind of ranted about this, so I don't really need to say it any further. It's time to take some Q&A. I'm being incredibly patient with my own personal home, with the investment portfolio. We're also remaining patient, but we're going to go if the deals can cash flow from day one, and we're also going to go in with a strategy that's going to be sustainable. Many folks are buying right now. They're running their pro forma based off of the Fed pivots and interest rates dropping. The way that I'm looking at this is we're going to invest in a property that's going to cash flow right now, but when interest rates do drop and we can refinance, that's just the cherry on the top. We already got something pretty dang good when they drop rates and we can refinance, cash out our equity to roll into the next deal. That's just the cherry on top. But if the market does just continue to go sideways, or they continue to raise rates and we can't refinance, or whatever the story may be, we can't refinance, the day that we sign that deal, we're going to know it's going to cash flow day one. That's important to me as I look at this asset class, is finding a business model that's sustainable. Like I said, for me, it comes back to utility. It's just like with crypto. It comes back to utility. The utility's never going away. The utility's only more in demand. Folks really want a nice house in a nice neighborhood. See, let me just speak on this broadly. Generally speaking, across this country, there is a shortage of nicer homes in nicer neighborhoods. Now, you're like, come on, Zach, what are you talking about? There are a bunch of new homes, cookie cutter homes in these new developments that are being thrown up, for sure. But the older neighborhoods where you can find something that actually has a little, room to breathe, right? In a neighborhood where people have pride of ownership and you're near a good school, there's a shortage of those across this country. And in particular in my area too, I'm in one of those areas, or at least the area that I'm looking to buy, right? The area that I'm looking to buy right now, good family home, good neighborhood, offers are going within the first week, and some are going over asking. Now, when you get up into the higher price points though, I'm seeing incredible price drops. Just yesterday, 2 listings over $1 million that I've been watching for a few months now, that they're on the market for a much longer time right now, and they just dropped by $50,000 and $55,000 yesterday. Then I had a couple more properties that are over $1 million listings that I saw drop over $100,000 last week. So in my market, we're seeing a big time correction on the upper end. Folks in my area can't afford that. Folks, and there's only so many Californians who are cashing out and coming in. And the investor aspect of Canadians coming down has slowed down because for about a year and a half or 2 years, the Canadians couldn't come down and visit their properties, right? They like to come by their little they call them cabins. They're little older homes in my area. And they like to come down to their cabins. And God bless them. But for 2 years, they weren't able to. In fact, some still aren't, right? If they're not fully, done, if they haven't done the deal, I've heard stories of people kind of getting by that or whatever. But if you haven't done the deal with the jabby jab, you can't even come down to your property still, right? And so that has actually slowed down some of the investment that was coming from Canada down into my area. And so that's why the higher end homes I'm seeing are sitting on the market for a long time. I've seen multiple properties on the higher end of the rent market. These are properties that are renting out for $3,600. I've seen the guy hasn't rented it out in a year. Now he's bumped up the rent from $3,600 to $3,800. Nobody's rented it in a year. And what's interesting about this story and many others in particular that I'm seeing is that a lot of real estate guys, a lot of real estate gals, guys and gals who are in the game as brokers are getting caught up in some situations. This guy in particular, he's a listing agent. The owner of the property is the agent that's been trying to sell the property and rent it out. Hasn't been able to do either. And I've been listening to Michael Bordenano, I'm butchering his last name, Michael, from Florida. And I really like his channel on real estate too. And he's sharing a lot of stories like that in the Miami market as well. And so on the higher end, these markets on the higher end are really getting squeezed out. But when it comes to affordable housing, when it comes to that median price range for a family, that's still going. And folks are now taking more sacrifices, right? Like I said, I don't want to live in the cookie cutter little housing development that's being thrown up down the road and buy 1,500 square feet for $550,000. And I got to worry, about enjoying my dinner with my neighbor through the window as we're 20 feet apart. But the neighborhood's getting bought up and there are folks that are moving in. And it's because it's at a price point that folks can still make happen, right? You're, a few $1,000s. It's squeezing folks. It's tough. It's tight, but they're making it happen. You get up 700 plus in my area. I'm seeing all these properties sit on the market. If they need considerable work and basically 700,000 up, they're sitting and they're doing incredible price reductions. Right. So that's the beautiful opportunity. If you're sitting on cash, you got a little bit more money to work with. On these higher ends, you're going to be having even bigger price adjustments where you're going to get even more bang for your buck, even better deals on that higher end. But we got to remain patient because we still have a ways to go. Like I said, we're in the first inning. We're in 6 months of a housing downturn, and the average of these is 33 to 70 months. Right on the back end of that's 5-6 years of a downturn. I don't think that we get 5-6 years of a downturn because markets move so much faster now and there's so much more at play. We're in the middle of a transition to a new financial system and everything that's happening with the dollar and the currency reset as well. So I think that, we have a couple years of chaos continuing on here, 5 to 6 years of a housing downturn. I don't see that happening. And in some markets we might not even have much of a housing downturn at all, right? The Midwest is going to keep plugging along. But with that being said, I have ranted enough, folks. It's been an hour. So let me take your Q&A. Thank you for joining me tonight. Let's talk about the real estate deals that you guys are looking at. What are you excited for? How can I bring some value to you guys? You can join our community. ZachRector.com is the website. Make sure you guys also smash that thumbs up if you appreciate these updates. Incredible time here tonight running up the real estate session. Hopefully you guys have been able to extract some value out of tonight's real estate rant. And you're as excited as I am about the opportunities coming our way. I've been dreaming, I've been studying real estate for 10 years, and it's one of those things, it's like starting your business, right? I felt the same way about starting my business. I wanted to start something. Oh, I'm going to get going. Oh, I'm thinking about it. And many people never get started, right? I'm so anxious to start. I have so much FOMO to invest in real estate. I won't say I have no FOMO on becoming a homeowner because I do. I want to just secure my costs and I want to set up a base and a compound and I want to build out a really badass media studio. So, I do want to do that, but that's the utility that I'm talking about, right? Where I can justify a payment because I'm going to run my business out of the basement, So, incredible FOMO to invest. I'm trying to remain patient as we look at our own deal. But what are you guys working with? $3,000 a month in the San Francisco Bay Area for a one-bedroom apartment. We haven't seen the worst, not even closer. Yeah, I'm seeing it in Toronto and Vancouver. You're looking at $2,500 to $3,000 a month for a little condo. It's pretty silly. It's pretty crazy, man. And I'm not a city person, by the way. If you guys haven't picked up on that, I don't do the cities well. I don't. I'm not a city guy. I'm a small town guy. I like to use the cities. Get in, get out, accomplish your business and get out. Get back to safety. Yeah, exactly, Christy. The eviction laws and how basically landlord rights were taken away in some states completely. That's why I talk about wherever we're going to go park our money, we need to be looking at landlord-friendly laws. And that's what I'm looking at too, right? I want to see a strong market. I want to see it business-friendly. I want to see it... I actually think that that was one thing that I was going to say with commercial conversion is there's actually an incredible shortage of warehouse space in some markets still. Like I said, I'm watching my Vancouver news up here up north, and they're talking about how in Vancouver, the prices on industrial property and the shortage of industrial property has driven many companies to rent out commercial industrial land over in Calgary. And so these ports are offloading the ships. They're sending all the goods to Calgary where there's more warehouses, where there's more industrial property and land to divide up all of these products and all of these things that got shipped into the country. And then they truck them back from Calgary back to BC. That's the supply chain in BC right now. It comes in, the Vancouver port is massive, right? One of the biggest ports on the West Coast. I'd have to check the stats. It might even be the biggest one, right? Definitely in Canada, obviously, right? They're bringing it into BC, but then they can't afford to rent out industrial warehouses in BC, and there's actually a huge shortage of it. And that's because they're doing the condos and the high rises and all the development that was taking place in BC, right? They're tearing down the old industrial warehouses, and all those buildings were torn down for high rises. And so now it lands in the port, it gets shipped off to Calgary, sorted out, and then shipped back to BC. And that's because of the real estate market right there. And so, it's interesting. The real estate game is so dynamic, and each market's so dynamic, right? Can't really speak on it generally. But the commercial conversion opportunity, I think, is massive, right? It's just who wants to invest in these cities right now, right? That's the gamble, right? You're seeing price reductions at 60, 70%, and you're thinking, okay, let's go buy this blood in the streets. You go walk those streets, well, you're going to have all sorts of bodily fluids and all sorts of activity taking place on those streets down below your property, aren't you? And that's the sad truth of the inner cities of America. They've been gutted already, and it's going to get worse. It got really worse, right, through the shutdowns and everything that took place, and what they've done to all these businesses. They can't even operate. Seattle, prime example. San Francisco, prime example. These businesses are closing down. Corner store, Walgreens, and Rite Aid's closing down because of the theft and the activities. And that's why, it's another one of those things where it's like you're basically, my mentor Dan Pena says the same thing about investing in other countries. Wherever there's a rule of law, the program works out. Well, same thing with our real estate investments right here. Wherever there's a rule of law, you have strong landlord rights, you can make it work, most likely. In these cities like Seattle, New York, San Francisco, you might as well account and budget for a full-time armed security at your front door, and you better have some serious insurance to cover that liability because the property's unmanageable without armed security. How sad is that? But it's like Dan says in regards to Russia. He said, one of the first trillionaires could come from Russia, during the greatest transfer of wealth in world history. He said there's going to be tons of money to be made over there, but there's no rule of law. You got mafia mob rule with Putin and gang, right? And if you don't ride, you get thrown out of the building. That's business over there. That's standard, right? So who wants to go invest? Who wants to go do business over there? Not many people. It's the same thing in these inner cities, right? You got to have you got to hire security to go visit your property. You're going to have to hire a full-time sanitation crew to scoop the poop. Now, I understand, and this is what I'm talking about, the inner city is getting sacrificed. You guys are out in the Midwest just having a good old time. Out in the heartland, life continues on. God bless you. Out here in the sanctuary states, we're scooping poop off the sidewalk. I wish I was joking, right? And for me, I don't feel, well, when I look at cities like Seattle, there's just the business climate's not there. The landlord-friendly laws are not there. And then it's a crime scene on the ground. It's the purge on the ground. It's a purge in the streets. That's not a market I'm investing in. Now, when I travel to cities like Dallas, it's a different story. There's some, so there's some dirt, there's some activity in the city, just like any city, right? But it's incredible how much more clean it is, how much more or less crime, and just how much more business friendly some of these other cities can be. And so some of these cities in the Midwest are actually thriving. The Carolinas are seeing incredible growth. North Carolina just got ranked the #1 business-friendly state in the country. That's a market where you look at not only setting up your business, but maybe buying some real estate too, right? And so that's how I'm evaluating these markets right now, Yeah, that's the thing too, is that there's a lot of Cooking Count says that look at modular buildings. There's a lot of new tiny homes, little structures. This has become a big deal, right? And so, give the people what they want, right? Senior housing, tiny homes, right? You don't need to live where you invest, and you don't need to live in the house that you've invested in, right? If you're providing utility, if you're providing affordability, if you're providing a good place to live that someone can be proud of, it doesn't matter if you want to live there or not. This is your investment, right? And so give the people what they want, right? I won't be doing the tiny home. I know I see a lot of people, this cracks me up. My mother talks about this too, so this is why this makes me laugh, about traveling around in a camper trailer and living out of a camper trailer. And I'm like, that can't last, right? I understand that these new camper trailers and RVs are super nice, but I couldn't imagine with my family, right? And now I'm about to have 2 under 2. So I got that dynamic. If you're retired and you're going to travel, then okay, God bless you, right? I get that for sure. But I'm seeing like people that like, I don't know. I can't speak on my stories too much, but we're seeing some very interesting things in my neck of the woods. Okay. All right. All good, folks. I just got a message from wifey. She's excited. She's excited to buy the house. But she's on the same page as me. We're just remaining patient. We're remaining patient, right? But happy wife, happy life. So that's why we're doing the open houses, and we're getting a feel for things, right? I want to make sure that we understand, how's this layout going to work, and this and that, and what are we willing to sacrifice, right? We're not going to get everything. We can't afford $1 million house. How are we going to generate utility from the house, i.e., where can daddy set up a freaking badass studio? That's, part of the consideration. But I want to make sure that we have enough room for our family. Like I said, we got 2 under 2, and I can't imagine living in one of these tinier homes. It's already getting tight in our little place as it is, but golly, the amount that we pay in rent is sickening. Converting commercial property to multifamily, that's what I'm talking about. Commercial conversion, taking office space to apartments. Yeah. Taking office space to, assisted living. Like I said, I really think that segment's going to be massive continuing on. It's not going anywhere. It's only growing. and the desire for folks to actually provide a better experience, right? What happened over the last 2 years in the nursing homes is kind of, I think, tainted, and I don't know if that's the right way to put it, but folks are now more conscious of it. Like, I'm not just going to send my family member off to the nursing home and just trust that they're getting good care. And like, I don't know. Like I said, personally, having gone through that with my own father, getting home health and having to run through the options, like, it's a big strain on a lot of people. And so for me, it's a problem that I have a passion in solving, which is, how many times do you hear that behind a good entrepreneur's story on why he started why he or she started a business? They were solving their own problem, right? And so for me, this is something I've been watching closely, and I'm like, yep, this is something that I'd like to address as well, because it really is meaningful and impactful work as well, right? It's not just buying a property and, oh, what's my cap rate? It's changing lives, literally. Not on any woo-woo, like, feel-good crap, but like actually. What else are we working with, guys? Thank you for joining me tonight. Our end goal for me is to be a snowbird, to be one of those that lives up north here for a good chunk of the year, but then heads on down south for the winter. That's my goal, to do that before retirement, right? And we'll see how we get that done, but we are going to get that done. That is the goal. The snowbird life, right? And so you guys who have already listened to me talk about real estate, you have already heard me kind of admit this. I'm kind of a softie when it comes to the weather. I was melting in Dallas when we did our Discord meetup down in Dallas just a few weeks ago. 100 degrees, humidity's through the roof. I was dying. I couldn't understand how people live there, right? But like I said, you don't have to go live where you're investing. I was like, this is a pretty good market for investments, but it is hell on earth here. Just speaking on the weather. But, that's the thing with me is I'm used to the Pacific Northwest, the mild climate where we don't get any of the extremes. We get down to 20 degrees every 5 years, for a day or two, right? We get one cold snap per year, and basically that's it. We deal with the gloominess and the cloudiness through the winter. It is very depressing, which is why I do want to head south for the winter, because our winters are very depressing, just clouds and rain for 4 or 5 months straight. But our summers are amazing. I don't know, I always say the climate change is working out pretty well for us. Whatever you want to call it, whatever they call the program or the agenda, or however they tell us the stats and the data, whatever they say, it's been working out pretty dang good up here for the Pacific Northwest, because our summers have been money. About 75 to 80 degrees on the hottest days. They've been a little bit too dry. But yeah, that's another thing that I'm considering for my own personal, but that's my own personal deal, right? As far as the investments go, Dallas-Fort Worth area is booming. We're looking at that market. Another one that I'm looking at is Phoenix, Arizona. So we have a lot of connections down in Phoenix, Arizona area, and I really like that market. I also really like Nevada. Not so much Vegas, but I do think about the utility of having a spot down there down the road. There's just so many conferences in Vegas. Vegas is a growing city, but it's also kind of bust. It's going bust kind of right now. But there's so much supply being built there that I'm like, well, I could snag up a nice little second home down there down the road maybe eventually. But, I don't really care to live near Vegas. But Nevada itself, in and around that area, nice weather during our winters. So thinking about that. Phoenix, though, with 50% decline in revenues for the Airbnbers, I think that's going to bring down these markets heavily. Austin, Dallas, and Phoenix. And so for me, this is an incredible opportunity for us to build the relationships in those cities. So we already got folks that are looking at deals, sourcing properties. We already have folks down there for management. We already have folks down there with relationships for contracting, construction, and basically everything that we need to invest in these cities. So we're already building out the teams in these cities to help us move in a major way. It's going to be incredible. Rosemary says, I think there's a market for housing with designated art studio space, similar to what Zach says he's looking for, a video audio production studio at home. Rosemary, that's a great point, and that's another commercial conversion play where you take an old building and you turn it into a podcast studio, right? I mean, this basically same thing as a recording studio, but we've transitioned into a podcast model, right? So maybe you can rent out your podcast studio, to folks that are looking to rent out a space. That's a serious business, for sure, right? There's so many opportunities. There's so many creative ways to play that. But then once again, too, you could also just take up the passive role of owning the property and then letting somebody else run that business, whatever that may be. So there's going to be incredible opportunities for stuff like that, Literally, I think I heard of someone was doing selfie studios. I think they were doing it in Hollywood or LA, it's kind of you got to understand your supply and demand, right? You go to an area where there's a bunch of influencers trying to make it. A selfie studio is a legitimate business, right? And who would have thought it years ago? But now people would be willing to rent out a space to go record themselves making a video of themselves talking. That's where we are. You spoke of creative financing. Could you elaborate? Yeah, so, basically right now you're seeing that the new construction that's coming, the builders are buying down rates and they're providing more incentives. That's kind of included in the creative financing. That's, rate buy downs, more incentives, getting a little extras added on. But then you also can look at the ability for sellers to carry a note or owner finance a property as well. There's actually quite a few owner finance deals for lots in my area that pique my interest, but the county is such a son of a gun in my area that I know it's going to take a lot of cash and it's going to take time. So that's the problem with buying lots and raw undeveloped land in my area. The prices are dropping. The dudes that have been offering their property up for owner finance for years still haven't sold them. But there's a reason. It's because they've done a wetland mitigation study and they're going to have to put in $30,000 worth of wetland studies, trees, picket fence, and you literally will lose, in some cases, 50 to 75% of your property because it's deemed to be wetlands. I have seen multiple people in my area get absolutely wrecked with this. They buy a property and it's a hayfield. They've been cutting hay on it for decades. Oh, no, no, no. Oh, no, no, no. We go to build on it. What do they want? What do they do? Wetland study. You want to put in a gravel driveway and a little shop? Well, you're going to have to go through a full-blown wetland study. And they end up carving up about 50 to 75% of the property. I was looking at another property a couple weeks ago. Owner finance deal in my area. 50 grand. Well, it was a little bit over that. It was like 57 grand, 58,000 for a 1 acre lot. Now, you can't even find lots for under 100,000 in my area that are 7,000, 8,000 square feet, let alone 1 acre. Down a quiet road, 58,000, 55, 60,000, whatever it was. Owner financing terms, they wanted 25% down, and they were willing to go and negotiate further than that, but they'd done a wetland study, and I had them send it over to me. You literally were going to lose 75% of the property You're going to have to do tens of thousands of wetland mitigation, even if you do it yourself, right? I have a landscape business. I can go plant the trees and do the picket fence and preserve the wetlands, right? It's still the permitting process, the cost of all the trees, all the materials, everything that's going to go into it. And then you lose, you're left with a 5,000 square foot lot on what was a 1 acre lot total after they carve it up and tell you that you can't build on your property. Now, what's insane about this whole thing to me, and it goes to the absurdity of all this whole climate change agenda and what they're pushing with it. Whether the climate's changing or not, whether this or that's happening, there are many other countries that are polluting the earth way worse than us. And us little Joe Blows that want to turn a piece of farmland and put our little house on there are not destroying the earth. We are not harming the environment at all. In almost all situations, we are improving the environment where we are building. We are making it flow better. We are helping the water get to where it needs to go better. And I'm sorry to rant on this, but it's such a pain point for me. It's such a pain point for me. Because I go into jobs with my landscape property service business and people are like, oh, I want to do all these things on my property. And I'm like, well, this is wetlands. And so if you want to do this before you look to build your ADU or build your shop, they are going to run you through the ringer if they see that you've disturbed this area. Even though you just want to clean out your ditch and help it flow out a little bit better, actually, improve the land, improve the nature in the environment around your property, because you didn't ask permission first and do it how they want you to do it or whatever, plant some wild brush in your grass so that it can just turn into wild jungle and brush and no man's land. That's what happens with all these saved wetland areas. They plant little tiny trees and brush and native plants, and it all just turns into a jungle that's unusable, unmaintainable, and it's just wasted, no man's land. Sorry for ranting on that. Not only is my state bad in this regard, but my county in particular. My county banned drilling new wells for water. Now, this is what's hilarious to me because I actually was listening to Vancouver in BC talking about how they're going to experience one of their worst droughts ever. It's one of the worst wildfire seasons in 100 years. So we should all just, ride our bike to work, eat our crickets, and live in a 15-minute city and sacrifice everything and not have any children and definitely don't believe in God. Or you guys understand what I'm saying. But it's a joke. How can you run out of water in this area? You are in a rainforest up there in Vancouver. It is technically a rainforest, literally. I just went to the Capilano Bridge, one of the main sightseeing things up there for tourists to do in Vancouver. I just went there 2 weeks ago and got to learn about the rainforest, right? But the way that they've managed and all of the building that they've done and allowed within the city, right, is what is disturbed and what's not sustainable, right? But God forbid you go put up a single family home on a piece of farmland. That's not allowed. But if you can put up a 100-story condo high rise, no problem. Please do so. And then we wonder why we have a water shortage in an area that's in a rainforest. It's a joke. Same thing in Seattle and same thing in my area. And it actually got reversed. They were going to face, I think they did face lawsuits, and so they reversed that. And so now you can drill wells again, but you have water 50 feet below the ground here. You don't have to do incredibly deep wells, nothing like that. Like up down the road, up on the hill there, you are at the water table is right there, right? Like you stick a straw in the ground, you're pulling water. And they try to ban people from putting in wells. It's crazy. It's crazy. Don't buy swampland. It's a bad idea. No, that's true, Troy. No, trust me. I'm not talking about swampland in Florida or down south, right? I'm talking about they find one little wild native plant that's a wetland. They find one bush of wetland grass in your field. Wetland, right? It's crazy. These are areas that are not wetlands in any sort of way or fashion, are not swampland, don't really have water issues at all, right? And so that's what I'm talking about in my area. I'm not talking about swampland or areas, down there. That's another thing too. I've been looking at Florida. But I'm watching closely what's happening because the cost of insurance is going through the roof, and you've had some companies like Farmers completely pull out of Florida completely. They're not even going to insure any properties in Florida. And I'm not used to having to deal with hurricanes coming through every few years. And it seems like they've been coming through every pretty often. A couple of these areas haven't even recovered from the last hurricane, and another one's coming through. So that's something that I'm not used to having to deal with, right? I have to deal with tree hugger nonsense up here in the Pacific Northwest. You guys down there are literally battling Mother Nature, right? It's kind of like the desert, down there in Arizona, Nevada, New Mexico, some of those other areas. You guys have your own additional challenges down there. And then, of course, up north, you guys are in, the tundra. And I'm definitely too soft to live up there too. But God bless you guys. That's some beautiful country in Montana. Beautiful. I've done one road trip through Montana during the summer. Absolutely beautiful, gorgeous country up there. But, the winters, that's unbearable for me. I'm sorry. Save money not starting a family early. I'm not here to say when or if you should start a family or hold off or do what. I would just say on from my deal, I'm just glad the timing of everything for me is right. And starting the family motivated me to do even bigger things in my business, and the level of clarity and focus to my purpose and mission after I figured out that I was having my first one has taken me to a whole nother reality. So having children has been the best thing ever for me, not only because they're just a blessing. I love my daughter, baby boy's on the way, but it motivated me. It took me to a whole nother level of existence within my business, within my mission, within my family, within my relationship with my wife. And so, I got myself into a position though, where I was ready to start having a family. Right. So, but even before I figured out, oh crap, we got one coming on the way. Even before we got to that point, I had my business. It was cash flowing. It was solid. I wasn't in debt. And I was, what was I, 26? Yeah, 26, 27. I had already lived out my young 20s. I had already been dumb. I had already had fun. Right. And so now I was ready, but I understand for many folks why they're putting off forming the household. But I also think that, just speaking on my beliefs, I think that a lot of people are going to have a lot of regret about not having a family. And, I just think that a lot of people are going to have that regret later on. Right. And also not setting themselves up to be in a better position to have a family when they decide to, because the cost of having a family now is so much more. So like I said, I had my business. I was good when we started making a family. For many people who do the traveling and live the life and have some fun and, not really setting anything up for themselves, those are the ones that are going to get into trouble and have regret and also have pain. And it's going to be tough. It's going to be hard as hell, right? Parenting enough is hard. I can't imagine having to struggle for diapers or wipes or to feed my baby with the formula, right? I can't imagine having to consider that on top of everything else. It's something else. It's something else. The cost of raising a family now compared to what it used to be, and then the cost of buying our first home. This is the situation that many millennials are finding themselves in. I feel incredibly blessed, but I understand the work and the sacrifice that I put in to have myself in this position, right? I didn't just party and have fun and blow all my money through my young 20s. I started building when I started my business when I was 21. And I kept having a good time, but I also kept a level head and I kept serious about my business. And the levels, right, continue to grow. And then what's taken me to the new reality has been having kids, but that's just speaking on my behalf. You know, I feel for so many families out there. I feel for so many folks that are wanting to. We got friends, we got family too that we talk to, and they want to have more, but they can't, or they want to get started, but they can't. You know, I feel for those folks 100%. You know, the modular homes are really becoming an option. They are growing, and that's why I think that going forward, there's a stigma about mobile home parks, right? Of, you know, being, you know, I'm just gonna be straight up, right? Just being trashy, just being, you know, troublesome neighborhoods, all this, you know, stuff that comes with that. And that's where I say there's a real opportunity to come in and not be that slumlord that just, as long as the checks keep coming in, you're happy and satisfied, but a chance to actually improve the property, make it a place that people are proud to live at. We've actually done that with my property service business in my community with 2 big mobile home parks actually recently, where we've came in and people constantly are stopping us in the neighborhood and they're saying, this place has never looked this good. And that for me is what it's about, right? That's what I'm doing in my property service business. But one day I plan on owning these mobile home parks, on owning these properties, right? And making them a place where people are proud to live, right? It's safe for the kids. And that was something beautiful to see. The kids actually being able to go out and have some freshly cut grass to actually go through. Not a hay field that's unmanaged and just, you know, a miserable place to be. We opened it up and we make it look like a park in there now, right? That's what we need to have, I think, as our base thesis and plan and goal and mission as we invest into real estate. Making a change, making a difference like that. I think that not only is it going to be meaningful work, which you got to love what you do. If you don't love what you do, you won't be able to go through the tough times. But I also think that it's going to bring more profit, right? That's how you truly raise the rents on come in on the mobile home park or come in on the apartment building, and you improve the property, you add value, and that's how you make more money yourself. Everybody wins, right? So that's the plan. Our work camps and oil industry are all modular. They are good for any weather. Yep. And I know a lot of folks, you know, traveling in the oil industry and those businesses. I know quite a few folks that do that. We got a big oil refinery in my area, and that's actually big business. When the turnaround happens, there's all these traveling refinery workers that come into our area for the turnaround. Actually, it's actually a really big deal in our area. Big supporter business. I'll tell you what, what's funny, and I'm sorry for ranting on my local area and the doofus moron sanctuary state that I live in, but it's what I know and I can speak on, and I have like really good examples of. This is just pure stupidity. Is these guys, you know, in my area, the tree huggers, the do-gooders save the world folks, want to shut down our local refinery, which provides so many good jobs and pays so many taxes and so much money it gets invested into our communities from this refinery. It would just be shooting ourselves in the foot to take out this refinery, but there's still a lot of people that want to do it. It amazes me. And we have a refinery that nothing really dirty's happening. Nothing dirty's happening. The worst that's happening is there's a little bit of the coal silt that comes because we're loading up the trains with coal and we're sending them up to Canada. That's the worst that happens. And other than that, it's a refinery that's just refining the products, diesel, oil, gasoline. So, I mean, it's not really that bad. And it's such a prime spot. It's one of the only deep ports actually in our area out at our refinery. I mean, it's so massive for the local job market and our local economy. But these doofus morons, in the name of saving the damn planet, are willing to kill out our economy. It's unbelievable to me. And I know a lot of people say, well, just move, just get out of there. Well, we got some pretty nice weather. You know, it's pretty nice. And I like being in between the cities. Now that we can go up to Canada, we've been going up to Canada all the time. It's 10 minutes away. Downtown Vancouver's 30 minutes away. And I like being a couple hours from Seattle. I like being in no man's land, small town USA. But I can go use the big cities in 30 minutes if I need to. I can go down to Seattle in 2 hours if I need to. Don't have much of a reason to go down there. The only times I've been going to Seattle in the past 2 years is to fly out of Seattle. Fly out of Seattle to come see you guys. We're planning our next Discord meetup down in Arizona as well, too. I'm really looking forward to that. I know. And we got a lot of California folks. There is an opportunity, though, for folks in California, though, because, well, all of you guys are millionaires because you just own a little shack down there in California. I gotta joke at you guys a little bit because you got your little shack down there that's worth $1 million, right? You guys are all millionaires because of your property there. You own one house, you're a millionaire in California. But in all seriousness, we've talked about this. One of our members, Travis, actually, he built an ADU and basically house hacked his property, and he actually shared the example of how he did that with our Discord community, and it was very interesting, case study on how to house hack and how to add an ADU. But a lot of cities in California are actually making it easier to build out your ADU. Now, the cost of construction is so high, and you're still going to probably have some permits and stuff too, but they're trying to bring down those permitting costs, and they're trying to make it easier to build out ADUs. And so that may be another opportunity for you folks like you down in California or in other states and cities that are considering doing so. I know Canada's talking about that up in BC as well. They're talking about allowing for more density. I want to get the hell away from that density. You guys can have it, but for folks that can take advantage of that may be another opportunity. All right, guys. Any last minute questions before we wind it down? If you guys are looking to get tapped in, you guys can head to my website, zachrector.com. And like I said, over in the Discord, we're talking about actual case studies of deals that folks are doing, folks that are considering. We're getting our due diligence done, right? And we can actually talk about deals. We can actually talk about your business. We can talk about your side hustle in a more intimate conversation. That's the value of the Discord group over there. We've just had so many people join recently. And so if you joined recently, thank you. Appreciate your support. And we're going to get you tapped in, and we're going to show you what we're working on over there because it's absolutely massive. And just been an absolute pleasure. The momentum behind our community is major. It's continuing, and I'm just looking forward to the end of this year into next year, getting some serious things started up and on the way. So with that being said, folks, I hope you guys enjoyed this real estate rant. We'll do it again here soon, and I will see you guys tomorrow morning. Thank you so much for tuning in. If you guys can do me a big favor and smash that thumbs up on the way out, make sure you subscribe, hit that notification bell, and I will see you in the next one. God bless you guys.